Hi, I'm here in Acapulco with my friend David Morgan, and it's been quite a while since we've done some videos together. But we were talking just a little while ago about the timing of this market and when gold and silver are finally going to take off. And we've got different methodologies, but we come to the same conclusion. So tell us what you were saying about your methodology, Dave.
Well, silver took off and broke through the 555 level in September 2003. And based on Jimmy Rogers' book about the normal super cycle in commodities, there's 17 years. So you had 17 in 2003, comes out with 2020. And I know in a recent video you did, you had the same number, 2020.
Yeah, I've been saying ever since I got into this, that it would be before the end of this decade that we're in right now, which is the end of 2020, that there would be a currency crisis. In 2000 we had a stock market crash. In 2008 we had stocks and real estate, and I'm pretty sure that this time it's going to be stocks, real estate, and bonds. And when investors are taught to run towards certain safe haven assets in a crisis, and that safe haven asset is usually U.S. Treasury bonds. But if there is a problem with bonds, it only leaves a couple of asset classes. And what are those, Dave?
Well, there'd be gold and silver, and I think these days you'd have to factor in the cryptocurrencies as well.
Yeah, and so that's when you're really going to see them take off. Dave has said for many years that what is really going to propel silver is monetary demand.
Absolutely. When you have lost faith in everything else, you're going to go to something that's been trusted for thousands of years, and that's specie, precious metals.
Yeah. I see this going along with the popping of a bunch of bubbles. That's what will precipitate this currency crisis that I'm talking about. And when those bubbles pop, one of the reasons that silver is low, and in a whole lot of cases below the cost of primary silver producers, companies where their mine produces just silver and not silver as a byproduct. How much silver is actually produced as a byproduct of mining other metals?
About 70%.
Okay, so you got 70% from mining other metals, and then those other metals are things like
lead, zinc, and copper primarily. 10% of the silver market's from gold mining.
Okay. So lead, zinc, and copper. So as soon as the real estate bubbles in Australia and China, New Zealand, Canada, once those pop, you have less demand for copper plumbing and copper wire. And when you start making less cars, you don't make as many lead-acid batteries, and you don't make as many zinc castings. And so when the demand for those base metals goes down, that's when all of the excess supply where silver is a byproduct coming from these metals, that stops just at the same time when there's monetary demand. That's the scenario that you see, right?
I do, and then there's going to be a certain amount of high-tech applications that are required. They're not going to stop making, cell phones. There might be lower demand, and these are essential to the product. So there probably or could be a demand that's both monetary, which is the super demand, and then there'll be some industrial demand that's hanging over there that needs it with less supply because the base metals are not producing the byproduct silver for them. So I could see it be a two-phase thing where monetary demand gets the industrial users very worried about the supply chain.
And they start stockpiling.
Exactly. Now you got a feeding frenzy going up. Who's going to be the last bidder? Is it going to be the people that want it for money, or the people that need it for their final product or good?
Yeah. So anyway, that's our take on it. I think before the end of this decade that you're going to see some big fireworks. And, there's one last thing. Dave and I were talking about I personally see $5,000 an ounce gold as like a stupid low price. This is incredibly low. And we're currently at a gold-silver ratio where silver's value is less than an 80th of gold's value, which means silver is very undervalued compared to gold. Gold is stupid cheap right now. What do you see as logical price ranges for gold and silver?
Well, there's such an illogical debt-based system. It's so hard to put on your hat and think clearly. But as we both know from your book and discussions prior to this, The easiest way to find out what the supply, or the paper price of gold is to take the M1 money supply, you could argue M2, divide it by the ounces that the Treasury states it has, which is 265 million ounces, and you come out with the price of gold. So if you did that in 15 years ago, it came out $2,500 the ounce. If you did that today, you could get them out with, I think it's like 15 to 20,000 an ounce. So I think 5,000 is too low. I think 10 is actually a modest number.
Yeah.
But if there is a currency destruction, if there is a true currency crisis, and there could be one, then you really can't put a paper price on it. So I think 5,000 is very achievable. I would be somewhat disappointed, not because I want a certain amount of fiat for my gold coins, just I think the market wouldn't really clear properly unless you get above 10,000.
Okay, so there you have it. Those are the predictions that we've got. Live from Acapulco. Thanks for listening.